Hi, this is Vic Tantry at Canjo.com. In this video, I'm going to show you how to use a home mortgage calculator to analyze a bunch of different scenarios and payment plans for your home loan. This spreadsheet was created by Dr. Vipper at Vertex42.com. Vertex42 is a wonderful online resource featuring dozens of different spreadsheets, many of which are available for free, and some of which are available for a paid download. I highly recommend you check them out. One of the great things about the Vertex42 spreadsheets is that they are rich in information. For example, if you scroll over any of these little red arrows, they'll give you a lot of information about that particular cell. So for the loan amount, it says that this is the amount you have borrowed, not the sale price of the home. That's an important point of clarification. If you enter the current balance of your mortgage, make sure you adjust the term length to be the amount of years that you have left on your mortgage. So there are a lot of arrows like this that'll help guide you through the spreadsheet and help you really make sense of a lot of the complexity. Let's get started with some of the inputs. The first one is the loan amount, which we just talked about. We're going to assume a $250,000 mortgage. Right below that, we have the annual interest rate. We're going to assume 6% per year. Next up, we have the term length in years. How long do we expect this loan to last? We're going to assume a 20-year loan. Next up, we have the first payment date. I'm creating this video in August of 2009, so we're going to assume that my first payment date is September of 2009. This is important because it will customize the entire spreadsheet based on this input. Next up, we have the compound period. How often is the interest compounded? Usually in the United States, it's compounded on a monthly basis, while in Canada, it's semi-annual. But again, you can customize this based on the specifics of the terms of your loan. This isn't something that you normally get to decide. Next up, we have the payment frequency. How often are you expecting to make payments? Once again, you have some choice here determined by the terms of your loan, and we're going to assume monthly payments. Right below that, you have a very important output, which is the monthly payment. As you can see, our monthly payment is $1,791.08. Let's now scroll down a little further to this little box that says home value or price. This box represents how much we expect the home to actually be worth. Right now we're assuming that it's the same as the loan amount, but it can actually be changed based on the expected value of the home. The reason this is important is because property taxes, homeowners insurance, and monthly property management insurance are all determined by the home value, not by the loan amount. These tabs right below that are just assumptions, but they can vary on a state-by-state basis. However, based on all of these outputs, we can get a total monthly payment, which includes the taxes and the insurance costs, and that's going to be $2,329.41. We're going to skip this little extra payments tab for now. I'm going to come back to that a little bit later on. For now, let's jump up here to this balance at a specified year tab. This allows you to just simply understand how much you're going to owe at the end of a certain year. How much is the outstanding balance left? So for example, let's put balance at the end of year 10. So at the end of year 5, let's see that we have interest paid of $71,000, principal paid of about $37,000, and our outstanding balance is going to be $212,000 left. So those are all relevant things, and it's something that you can play around with a little bit if you want to understand that a little bit better. Let's now move over here to the fixed rate or adjustable rate box. You have the choice to choose between the fixed rate or the variable rate interest. Now, if it's fixed rate, all of these boxes freeze up because you can't make any more assumptions. But we're going to assume that we have a variable rate mortgage. And so let's walk through each of these boxes. Remember, all of these boxes are simply assumptions. There's no way to really predict 100% certainty for any of these things, but they are good to help give you a better sense of the financial picture. So the first major one is the years that the rate remains fixed. The rate will remain fixed usually for a certain number of years. We're going to assume 3. Right below that, we have the interest rate cap. What is the maximum interest rate? We're going to assume 12%. Below that, we have the interest rate minimum of 4%. The periods between adjustments simply represents A period in this particular situation, by the way, is a month, remember. And we're going to assume that the adjustments are going to occur every 12 months. Again, customizable based on the assumptions of changes in the economy. And right below that, we have the estimated adjustment. How much do we expect interest rates to increase in that 12-month period? Based on all of these inputs, we can get the output of the highest expected monthly payment. Now remember, this doesn't include all the property taxes and homeowners insurance and other things that we talked about earlier. This is strictly the mortgage part of the payment. So now that we understand that, let's scroll down a little bit here to this tax deduction section. This allows you to understand a little bit about how much you might expect to save on taxes. A lot of loans will allow you to deduct taxes on the interest that you pay. So if we input our tax bracket, we can get an effective interest rate, and probably most importantly, we can understand how much tax we expect to be returned, rebated to us over the lifetime of the loan. Granted, these are all assumptions again and are very much dependent on your situation, but once again, it can help you understand your financial picture. Let's now move to the left here to this summary tab, which shows you the total payments that you are outlaying, your cash outlay over the lifetime of the loan, and of that, how much is interest. So we are going to have an interest payments of $223,000 over the lifetime of the loan. Let's scroll here to the payment schedule. The payment schedule has several different columns. The first one, column B, is simply the payment date. When are we making the payments? The interest rate is in column C. The interest due is in column D. This shows how much are we paying in interest in each period. And as you can see, the interest continues to decrease, the interest exposure, over the months as they go by, which is to be expected. The payment due is our monthly payment. This extra payments column, I'm going to come back to this a little later. I talked about how we're going to do a recurring extra payment option, and we're going to illustrate this later on in the discussion. For now, let's move on to the additional payments. This allows you to make a one-time additional payment. Let's say I get a bonus of $5,000 in month 8. So I input $5,000 here, pay off my loan a little bit quicker, and all of the outputs are going to change. My total exposure is going to decrease. My total interest is going to fall. As you can see in the summary sheet up here, my total payments has decreased. My total interest has decreased. So making payments early on in the payment schedule, really any time, an additional payment can help you reduce your overall debt and your overall interest exposure as well. Let's delete that for now. We'll come back to that a little bit later. In column H, we have the principal paid. How much principal are we going to be paying off each period? And our total balance, our total outstanding loan. We have the tax returned. How much are we expecting to receive in tax rebates based on our interest payments and based on our tax bracket? And finally, the cumulative tax returned. How much tax have we saved over the lifetime of the loan? So this payment schedule helps talk about all of those major issues for all of the periods. Let's scroll back up here, moving to this extra payments section that I was talking about earlier. This allows you to set up a recurring extra payment. Let's say, for example, that I receive an annual bonus of, let's say, $10,000 per year. And I want to take that annual bonus and I want to put it towards paying off my mortgage a little bit faster and save some money on interest. So I'd move down here, and our payment interval, as you can see, if we look at this red arrow, it says that it specifies the extra payment amount will be made every N payments. So if we're going to be making monthly payments of $10,000, we input 1 here. But again, we're only going to be making yearly payments. So we're going to do this, we're going to input 12. We're going to be making this payment every 12 months. Next up, we have our extra annual payment. This represents what we're planning to make. This allows you to make an extra payment every year in addition to the extra payment that we were talking about. But since we're already making an annual payment, this is going to be a little redundant for now. Next up, we have the starting payment. This shows you when do we want to start making this annual payment? Is it going to be after the 5th month? Is it going to be after the 10th month? So right now, we're going to assume that it's going to be after the 5th month. So those are the input fields in the extra payments. And right below that, we have a little output that says the total amount of extra payments. And it shows also that we're going to save $91,000 in interest as a result of all of these extra payments. So that's a sizable amount of money just because we're making these extra payments over the lifetime of the loan. And if we scroll back down over here to the extra payments column, we can see that in month 12 we're receiving a $10,000 extra payment, and we're inputting that in there, and the spreadsheet has now taken that into account. So this spreadsheet, I hope, has helped you understand how many different aspects of analyzing home mortgages and how you can do that very effectively in one single space. I just want to show you once again that this spreadsheet, like all of the other Vertex42 spreadsheets, are quite printer friendly. If we click on the print preview button here, you can see that you have a very nice printable schedule. Scroll down a bit, and the whole summary sheet and all the loan schedules are very printable, and you can share it with anyone you want. So thank you very much for watching. I hope this video has helped you understand the home mortgage calculator. And to purchase this calculator, I recommend you click on the link to the side or embedded in this video. Thanks again for watching, and for similar videos, I recommend you check out my website, www.canjo.com.